Hello traders, Julius de Kempenaer here. I hope you had a great weekend. Let's have a quick look at what's happening in the markets at the start of the week. And this week I want to do that using the equal weight sector indices, or the ETFs that track the indices. That's the better wording. The reason to do that is because the cap-weighted ETFs, as we have pointed out a couple of times already in the SIS report that we do on every Wednesday, is that it gets distorted by the mega cap stocks in some of these indices. So if you look at the rotations and the RRGs as shown here on the screen for the equal weights, you get a little better balanced outlook. I hope you agree that this is more evenly spread out. This is the weekly and this is the daily, and you get a better sense of what's going on under the hood of the markets. And most of the time these tails will kind of move in line with the tails that you see on the cap-weighted indexes. But sometimes there are differences, and it's especially those differences that are giving us interesting ideas and interesting clues. Anyway, energy remains the most interesting sector, both on the cap-weighted and the equal-weighted, and you see that massive tail on the weekly pointing higher and at a strong heading, and you see it going down here on the daily, but this last 2 days it already started to pick up on the RS ratio scale again, which is another indication of strength. And also it is the highest reading on the RS ratio scale, so certainly a sector to keep an eye on. What I want to point out is that what you see here is utilities, materials, and then on the cap weighted you see industrials also there, but you can see industrials here rolling over on the weekly. What's also interesting is that these RRGs point to a little more defensive action, I think. Because when I look at the defensive sectors, and you got utilities, this is a very clear, strong rotation for utilities. And then here you see all of a sudden this big hook up here in staples. RSPS is staples in the equal weight version. And if you look at the daily tail of staples, you see it actually picking up quite rapidly here. So staples and utilities picking up quite rapidly, and then there is healthcare moving the opposite direction. So healthcare is the kind of the odd one out, but if you look at healthcare here, you see that that is moving to the left inside the lagging quadrant, where utilities and staples are pointing higher. So it's not an overall win for the defensive sectors. It's especially utilities and staples, to a lesser degree healthcare, but it's kind of the reverse that we talked about in SAS a couple of weeks ago, that healthcare has a definite number of growth stocks in it. So it's not surprising that they're now moving the opposite direction. So keep that in mind. Another tail that is worth looking at is the technology sector, because here you see RSPT, which is the technology sector, inside the weakening quadrant, moving towards lagging on the weekly RRG. And if you look at the daily version of that tail, you can see how technology actually rolled over and is now rapidly heading back into the lagging quadrant. So the technology sector, you see a rotation on the weekly inside weakening heading to lagging, and on the daily has already rolled over and is now pushing into lagging. So that kind of puts technology into the cautious corner, so to say. Anyway, I think that this image, this picture gives you a little better overview, a little bit better spread out, more evenly created outlook for US sectors. On Wednesday, when we do SIS, we will dive into much more detail for the US sectors, including equal weight, including cap weighted. We're going to look at mega caps, small caps versus. We're going to look at growth and value. And before we shut off this video, I want to have a quick look at the energy sector, because I think that is a very important sector at the moment. As I said, this long tail inside improving. Despite the loss of momentum, relative momentum on the daily, it's still very detached from the rest, which is a strong sign. The higher the RS ratio scale, the better it is for the sector. And if you look at the price chart, we see a very interesting image because I think this is almost a perfect ascending triangle. We broke out. This is a weekly chart. We broke out a couple of weeks ago. We're now going back, and it looks as if we're going to test this former resistance level as support. And there is this rule where you can have this rising support line. You can draw a target line from the highest point or the first point in the triangle, which gives us a target which goes up, but this here is the all-time high level that goes back to 2014. So as I would think, very decent upside potential, at least to the level of the all-time high, maybe even higher, with solid support coming in only a touch lower. Anyway, thanks for watching. I hope you enjoyed these videos, and please sign up to watch SIS, which I record and create together with Todd every Wednesday.
Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.